RBA, there's a hole in the bucket. PwC scandal rocks world financial foundations. And the untold story of US bank bailouts coming up on today's Citizens Report. Welcome to the Citizens Report for the 2nd of June. I'm Elisa Barwick. Joining me today is Citizens Party Research Director Robbie Barwick. Welcome, Robbie.
Thanks, Lisa.
On today's show, we're going to be discussing how the RBA is trying to fix inflation and how it should really be fixed.
And an excellent exchange in the Senate estimates this week on that subject.
Yep. And also the PwC scandal that just won't go away and in fact is really rocking and can
snowballing,
rock the foundations of the global financial system, which is has to go anyway.
Yep.
And lastly, we're going to talk a little bit more about the US banking crisis and how it's not the smaller regional banks that are the real ones in trouble.
Yep.
Now, don't forget to hit the like button, subscribe, share this as widely as you can, and you can also find details below how you can follow through in supporting us by donating, if you're able to support everything that we're doing that we talk about on the show. And thanks to those who have already done so.
Lisa, before we begin, I just want to mention very briefly, if I can. So we're recording here on a Friday morning. Yesterday was the verdict in the case of Ben Roberts-Smith, and you shouldn't misinterpret the verdict. It's a civil case, so that doesn't mean he's been found guilty in law of war crimes. However, the judge ruled against him because he's basically saying there on balance of probabilities there's some truth to those allegations. What I'm interested in, what we're interested in, is what this may mean for David McBride. David is a friend of the show. None of this war crime stuff would be known if he hadn't have leaked the documents as an Australian Army major who was a lawyer who was really disgusted by what he saw in Afghanistan. And he wasn't disgusted actually at the perpetrators as much as he was at the brass, at the top management, the senior officers and the politicians who are ultimately responsible for that because they're the ones that kept us in this 20-year futile war. David's case comes up in November, and we will help with the campaign around. We've already been helping with the campaign, but there's going to be some more done along the lines of the kind of attention that's been brought to bear on the Assange case. Because otherwise, the man who exposed this wrongdoing faces 50 years in jail just for exposing it, right? And that's atrocious. So watch this space. We'll keep you updated on the things that we're going to do to help in that case. Yes,
stay tuned. Okay, RBA, there's a hole in the bucket. Now, next Tuesday, the RBA will have their meeting as they do at the beginning of every month, and they're again discussing whether to raise interest rates and the likelihood bounds that they probably will raise interest rates again. Again, worsening the current situation for both mortgages and for renters, making the cost of living crisis even worse than what it already is. So this debate again was raised in Senate estimates this week, and the good old faithful Green Senator Nick McKim came to the party and did an excellent job again in following up on what's been a couple of years now of really nailing down RBA Governor Philip Lowe on how he expects just having this one tool of interest rates to really work, for the entire economy and for the people that represent that economy, which it clearly is not.
Elisa, some people think toy with the idea that we may not live in a real world but in a simulation controlled by AI in which some of our fellow human beings are not actually human, but they're kind of like humanoid AI robot types. I reckon if there's any truth to that, Philip Lowe should be on that list. You're going to see this. You're going to see this in the video.
Yeah.
We're going to play a video now, but let me just say before we do, we could be having. We will be the 12th interest rate rise in 13 months if that happens next Tuesday, and whilst interest rates should be normalised because they were ridiculously low, right? So in a sense of they're just being normalised. But they're only doing this because they only have one idea of how to fight inflation, which is basically crush people's daily well-being.
Yeah, squeeze
right?
the people.
Squeeze the people to fight inflation. So Nick McKim has taken up the right subject, and he actually, you got credit where it's due. What's the opening of this especially? But we're going to play it to a certain point where it all descends into shambles. But Nick McKim nails the RBA governor, and then we can talk about that in a minute. So what's the clip?
Thank you, Thank you, Senator Smith. There may be time. Senator McKim.
Thank you. Dr Lowe, you've spoken a little bit about rents just in the recent exchanges. So can I just be clear with what you're advising the committee? You support the contention that rents are, increases in rents are putting upward pressure on inflation, correct?
It's contributing, certainly, yes.
Yes.
And it will for a while yet.
Yes. Now, your most recent statement on monetary policy says demand to purchase new detached housing remained exceptionally low, reflecting a range of factors including higher costs of land and construction, falling established home prices and poor buyer sentiment. Would you accept the contention that interest rate increases from the RBA are playing a role in all of those factors? That is, higher costs of land and construction, falling established home prices and poor buyer sentiment.
I think higher interest rates do reduce the demand for new construction for a period of time. That's true, but I'm hesitant for you to draw the conclusion that's the main thing going on.
No, but they play a role.
Really it's a factor, but the main thing is the inflexibility on the supply side of the housing market.
I'm simply asking for your agreement to the contention that they play a role.
It's a factor. That's one of the transmission mechanisms for monetary policy. It's true.
That's right. So higher rents equals higher inflation, equals higher interest rates, equals higher rents.
Yep.
Well, there's a hole in the bucket, isn't there, dear Dr Lowe?
There is, because higher interest rates mean weaker growth in aggregate demand, lower incomes and less capacity to pay. So it affects the demand side as well.
But the point I'm making is it's a vicious cycle for renters, Dr Lowe, isn't it? Because you've got higher rents, which leads to higher inflation, which leads to the RBA putting up interest rates, which leads to higher rents. And it's the people who are renting who are just paying an exorbitant price at the moment for that vicious cycle.
I don't think the cycle doesn't work like that, because higher interest rates are contributing a bit to higher rents, but it's not the main factor. But we're not then responding to with interest rates to the higher rents again.
No, you're responding to interest rate. You're responding to higher inflation by putting up interest rates, which is then, as you've just agreed, putting upward pressure on rents, which is putting upward pressure on inflation. I mean, I know I'm not suggesting these aren't the only elements, but that is a cycle that exists, does it not?
Well, there is an element there, and the solution to it isn't lower interest rates.
All right.
Because that would have other consequences that we've talked about. The solution to all these problems in the housing market is supply, supply, supply.
Well, and in fact, there are other things
we need to invest in housing.
Well, we do. Yeah. Well, it would be nice if Labor actually put forward a package that did constitute a significant investment in our housing, rather than making the problem worse.
It's urgent.
Rather than making the problem worse, which is what Labor's proposing to do.
Urgent.
But Dr Lowe, I want to talk.
Houses doesn't make the problem.
Chair,
I want to ask
some of
Dr
us
Lowe.
have actual questions for the Governor.
That's right.
And
that wasn't a question.
Despite the lovers tiff going on here.
I was responding to an interjection, an unruly disorderly interjection. So this is taking up my time.
Order.
So I would like to ask.
Senator McKim.
We don't get all that much access to Dr Lowe. So and thank you again for coming in, Dr Lowe. So you were asked about alternatives to fight inflation at the National Press Club in April, and you mentioned tax reform, and I'm very pleased to hear you say that, and you've referred to it again this morning. But I want to put this to you, there are other options apart from tax reform, are there not? I hope you weren't mounting an argument this morning that we should outsource tax policy from the government to some independent authority like the RBA.
No.
But what about things like price control? Like that's
sorry, what?
price control, Dr. Lowe, which the government, I point out, is already engaged in the energy sector. We recall Parliament actually last year to deliver price control, an element of price control in the energy sector. So there's price control, there's tax policy, there's even prudential policy that could make a difference in those areas. Would you agree with that?
Well, in some limited and specific circumstances, I understand that price controls can be beneficial, but as a general proposition, I think it's the wrong way to go, because price controls distort the supply side of the economy. They might help kind of reduce some kind of problems with kind of affordability, but price controls distort supply.
Now, Elisa, so what happened at the end there is those major party politicians are having pot shots at each other and whatever, but that's on Nick McKim's, he was given 10 minutes to ask his questions, right? They're actually interfering with the kind of questions he's asking, because these questions aren't coming from the major parties. These questions are only coming from the crossbenchers. You may not have noticed, but the guy sitting next to McKim in the clip, you only see his shoulder, is Malcolm Roberts. He was lined up to ask questions. Senator Jared Rennick from the LNP is the only major party politician who ever asked these questions, but he's becoming a bit of a pariah in his own party because he does this sort of thing. But it's the crossbenchers that are putting the pressure on the RBA to say, you've got to be accountable for what you're doing here. And McKim had him stone cold. And then Philip Lowe had the gall to say, the answer is not lowering rates. Well, I'm not disagreeing with that. But he and his predecessor presided over the extraordinary historical lowering of rates down to zero to prop up this property bubble.
And contemplated going negative, remember?
Contemplated going negative just to create a bubble that now has all these people trapped in unpayable mortgage debt. They created that. That guy and his predecessor, they created that, right?
And then when Nick McKim suggested we could have some kind of regulatory measures, God forbid, to constrain prices, such as price controls or even, as he's proposed previously, regulations of lending in terms of where banks are allowed to lend money or not.
Which is how we used to do it.
Reining in mortgage asset bubbles and so forth.
Just before Hawke and Keating deregulated the financial system in Australia, the way inflation was dealt with when it needed to be was the RBA would direct the private banks and say you must decrease your lending in this area, increase your lending in that area, because there's never a bubble of everything. There's bubbles, right? And the driver of our main one is the property bubble, and then the supply chain issue. So the RBA could be directing investment into infrastructure and product and industries that increase productivity and mean we supply things for ourselves. We have what they call import substitution, and solve the supply chain problem whilst decreasing credit for the property bubble to get those prices down and make housing affordable. They could do that. But instead, no, just interest rates across the board and crush families all around Australia.
Yeah, and so Lowe was trying to say, you can't have price controls because that would hurt supply. In other words, the market mechanisms, if the prices don't come up, would not be there so that builders come in to build more homes. But then look what's happening anyway. I mean, we've had a record number of bankruptcies of construction companies and builders, 1,300 I think the figure was for the year so far, surpassing last year already, an average I believe of about 5 a day, biting the dust. So it's not working anyway.
No. Also, it is the ultimate irony that coming out of the mouth of the RBA governor when he's talking about interest rate rises and the consequence of that, he says you can't have price controls. Do you know what the cash rate is? It's a price control on money. Yeah. That's what it is. Yeah. That's all he does is impose a price control on one part of the economy. That's his job.
Yeah, I mean, there's no real free market really when you look at how these kind of things operate. So all of their ideological bent in this for this direction is not even real. Now, let's talk about how to really fix inflation though, because I want to put up a graph here which shows the inflation historically in China, because China still uses these kinds of price controls. You know, they didn't deregulate. In fact, when everyone else was deregulating, they started introducing more regulations. When Glass-Steagall measures to prevent commercial banks from engaging in speculation were taken off in 1999 in the United States, China had just introduced it and was, just pushing it all through, and they went even further than the US had done.
And they were toying with the idea, because everyone else had dropped Glass-Steagall. By 2008, China was toying with the idea, maybe we should drop it too. And then they saw what happened in 2008 and said, no way,
put the brakes
we're keeping that on.
So inflation's coming down at the moment in China, and this is due to the fact, and you can read more in this week's Australian Alert Service actually about new regulatory measures. They're always re-looking at the regulation and bringing more regulation to bear, as they say, so that banks serve the real economy. They say that explicitly. This new regulator that just come in is quite renowned for making that statement regularly, which I mentioned in the article. So they have financial regulation in place to constrain inflationary bubbles. They have a focus on the real economy, and a measure of that I cited is that in March they had a 6% increase in electricity use, which of course they see as a good thing because that's a measure of the real economy growing. 40% of that increase for the month, which was a year-on-year measure, was from industry, rising of industry. Their exports are rising. Russia, interestingly enough, despite it having been subjected to all the sanctions globally, which was meant to crush its economy, has the lowest inflation rate in Europe now at 2.3% and record low unemployment. So, you have to have a focus on, and Russia was forced to do this. They had a lot of deregulation and still have, way too much. But having been cut off from a lot of the world, they had to say, right, we have to get our act together here and get our economy to serve our purposes. We can't just import everything anymore.
And when you have war conditions, you stop leaving everything up to the free market. You say, we've got to solve that problem, got to solve that, and you start solving those problems, and it's remarkable what can happen.
Yeah, and the other thing in the article that I cited is this summit of China and Central Asia, and I won't go through all of the examples, but they ran through at this summit the stunning transformation. And people, Australians and average people around the world would have no clue at this burgeoning region of Central Asia, desert, middle of nowhere, you would think it is. But the amount of development projects, dry ports, rail, tunnels, highways that has been built in 10 years since the Belt and Road was announced, is just absolutely stunning. We'll put up some pictures in the background. So the global majority of the world are talking with China and Russia. There's, various summits, Shanghai Cooperation Organisation, the BRICS summit coming up later this year, these Central Asian summits. There's been big forums in Moscow, the Eurasian Economic Forum, discussing how to create a new financial architecture around the countries that actually want to build and develop.
And have a look at this graph from the IMF about the rise of the BRICS compared to the G7, where you can see the size of the G7 economies is shrinking. The BRICS group is growing, and now they're overlapping, right? The two lines have overlapped. Now, you can see from the graph, the BRICS growth is driven by China. It's responsible for the majority of it, but it's an example why those countries are working with China and other countries want to join. They want to be part of. That's the growing engine for the world economy, right? And we, unfortunately, as a nation, have tied ourselves to the sinking stone. Yeah,
no, because China came up with the idea of the Belt and Road to share the model and the mechanisms they had created, which got us got the world through the global financial crisis, to propel the world economy with economic development and infrastructure. And that had been based on the way they built the nation over 40 years out of poverty. Which you have an interesting report.
Well, we've got a little clip we'd like to play now, and it's my report is how this clip came about that we're going to play it. So last year, regular viewers remember that I was invited, and I went and had dinner with the Chinese ambassador at the Chinese embassy, and I was accompanied by the former Associate Foreign Minister of New Zealand, Matt Robson, who was part of the Helen Clark government in the early 2000s. So he was visiting Australia and we were in Canberra for our postal bank forum because Matt was part of the government and the party that introduced a postal bank in New Zealand. But Matt has a real passion for foreign affairs because he was the Associate Foreign Minister as well. And we got this invitation and we went along. Now, I got criticised by media figures for doing this, right? And I'm thinking, well, get stuff. This is our biggest trading partner, right? I am going to show, if no one else, if everyone else is too scared to, I'm not. I'm going to show our biggest trading partner that there are people in Australia that are not afraid of China and are friendly towards China. About a month after I did this, Peter Dutton went and had dinner with him too, right? And I think I might claim a tiny amount of credit that sort of breaking the ice to make it sort of more normal that, hey, this sort of dialogue should take place. But when I was there, I'm representing a political party, the Citizens Party, right? And so the Chinese embassy reached out to me last week to invite me on behalf of the Citizens Party to observe a forum, a Communist Party of China forum, so like their political party's forum that was held in Wuhan. And it was about the economic development, the successful economic development of the Hubei province, which Wuhan's the capital of. I got that right, producer? Okay, just checking with my producer. Now, it was I only got to observe some of it, and we'll put the link below. People can watch the whole 2 hours if they want. We're going to play a little clip though, because what they had a section there where they got locals to tell success stories. Now, like the cynical smart alecks in the media will say, oh, look, this is Chinese propaganda. Well, if propaganda just means telling good stories about yourself, well, fine, call it propaganda if you want. But at least they've got good stories to tell. And that's what I want to show people. This is a good story, and so they covered the spectrum of economic development. So just before the person we're going to see, there was a young guy from a university in Wuhan talking about the role he and his colleagues have played in China's space program, which is incredibly successful. This girl, though, is going to tell a very, very different story, but it does relate to the way China has succeeded in its poverty alleviation program. And it hasn't done it by just writing cheques, throwing welfare at the problem. It has not done that. And I want you to listen to her story. It goes for about 3 minutes. And just think about yourself. Just think about what she's saying, and then think, well, we've got pockets of problems in Australia. We've got a terrible problem that just seems intractable with Indigenous Australians, First Nations people, right? Everyone's how do we close the gap and all this kind of stuff. We've taken the welfare approach. They've taken a different approach, and this is the Communist Party doing it, and they're proud of their results. And I think they should be proud of their results.
And it depends on the initiative of people in that
does.
communist.
Well, you make it. Yes. Watch for this. This is not imposed top down. This depends on the people taking responsibility for themselves. So have a look.
Good afternoon. My name is Cheng Zhi. Zhi in Chinese means orange, so my villagers always call me Little Orange. I was born after 1990s, and I am also the village party branch secretary of Dashi village. Well, it may be the lowest position in China, but you know what? In my village, I am the highest level official. This is Dashi village, my hometown. My village was really, really poor. I still remember when I was little, there was only one pair of rain shoes in my home. So whenever it rained, only the one who went out could use it. In 2009, when I left for university, I told myself, well, one day I must come back someday in the future to help my villagers to get rich. In 2014, I was elected as secretary of my village party branch. And at that time, my village had over 1,000 villagers, but only one road that leads to outside world. Everyone knows that if one wants to get rich, build roads first. But the problem is we had no money. So I gathered my villagers and told that those who have give money and those who have not give your labor. Once we get subsidies from the government, we will pay money back to you. But I was only a new hand, a young lady who was not that reliable. So many villagers said, What if all my money was lost? Who can assure me that the money would be paid back? As a new official, I must establish my credibility and make it done. So I told my villagers, let's all make an effort and do whatever we can. If we cannot get subsidies from the government, I will sell my house, and I assure you that all your money will be paid back. And without noticing my father, I would sell my house. And finally, I won their support and won their trust. After 3 months' hard work, a 3.5-kilometer road was successfully built. After the road was built, the next task is to help villagers become rich. So I, along with other CPC members in my village, we helped villagers to grow herbs and loquats, raise crawfish and goats. If you visit to our village now, you will find it's totally different. Currently, every household can get access to the internet, and mobile phones become farm tools. Why do I say so? Well, an e-commerce building has been established by the county government to offer online sales platform for all the villages. We no longer need to take our products to larger cities by ourselves. Instead, we put the product items on e-commerce platform and sell them online. Now, a remote and poor mountainous village like Dashi becomes a source of wealth.
Now, one of the things that China has ensured to back up that process is banking is available everywhere. I mean, they have postal banking, they have thousands upon thousands of banks of every kind, and their system supports that. And we have a bit of an update here on the possibility of Australia moving into postal banking or public banking of some kind.
Well, the clip we're going to play now is also from Senate estimates. So the last 2 weeks have been Senate estimates, and this is from a week ago in Senate estimates. And the person you're going to see is the National Party Senator Perrin Davey. Now, Perrin Davey is in damage control because she, on behalf of her party, put up the Regional Banking Task Force in late 2021, and it was garbage. They stacked it. 8 of the 11 members represented banks, and the outcome just rubber stamped the branch closures. And we got up this new inquiry because of the results of her task force, right? She is very sore at us. She's part of the same faction of the National Party as David Littleproud, who told me to my face that no way are we going to have a public bank in Australia. No way, it's not going to happen, mate. The world's moved on. And he's a banker. David Littleproud is a banker, right? So she's in that faction. And the thing is, though, our inquiry and the discussion of a postal bank is everywhere, right? We are kicking goals. We've made West, we did something that her task force didn't achieve. We made Westpac back down, right? So she's sore. And how does she respond to that? Well, we'll play a few minutes of her questioning in Parliament of the Australia Post CEO, who... this was coordinated. I'll put up a headline. There's a publication called The Mandarin, which basically misrepresented this exchange by basically saying, the headline was something like Australia Post has no plans to become a bank. That's how they reported this exchange. That's not what this is about. He's just saying it's not our decision, right? But listen, what's the exchange? And you can see where Perrin Davey is coming from, especially pay attention to what she says about competition.
Senator Davey.
Yeah. Thank you very much. I just have a couple of questions about Bank at Post, which I've asked you about in previous estimates. So we know the broad and far-reaching stretch of Bank at Post services and the fact that they provide services on behalf of about 81 financial institutions across Australia. I just want to ask, there has been quite a level of advocacy for a Commonwealth postal bank. Have you had conversations with those advocates about what that would mean for Australia Post and Bank at Post?
Thank you, Senator. No, look, I have read the media and some people raising that prospect. We have had no discussions with anybody, formally or informally. We are very happy to continue providing over-the-counter services, as you say correctly, for 81 financial institutions, 1,150 locations in regional Australia where there are no banks, and Bank at Post is the only banking facility. But we've had no discussions with any of those advocates.
It has been raised with me concern that a Commonwealth Postal Bank would directly compete against the other financial institutions that are serviced through Bank at Post, which may see a withdrawal of their support or their arrangements with Bank at Post and might limit customer choice. Have you any thoughts on that, or has anyone made those representations to you, or have you had conversations with the financial institutions that you have arrangements with?
No, Senator, we've had no discussions in regarding that matter. We have long-term contracts in place with 3 of the large 4 banks, NatWest, Westpac and Commonwealth Bank. As I say, we continue to provide a range of particularly consumer banking services to 81 financial institutions, and anything beyond our over-the-counter service is not a matter for Australia Post.
Mm-hmm.
So, a couple of things, Elisa. The Australia Post people, by the end there, they're talking about, hey, we need to expand services at post offices because why? Well, even at a minimum, there's 1,150 post offices. That is the only financial service in town. That's it.
The only
right?
footprint.
But all the limitations, by the way, if you go to Bank at Post and you see that the service there is more limited than a bank, those limitations are imposed by the banks, not by Australia Post, right? So that's a problem. It's the banks that are the problem there, and they're not even paying Australia Post properly anymore to be the agency for them through Bank at Post. So they're trying to wrestle with that problem. But Perrin Davey and this faction of the National Party that oppose this policy, they've shown their true colours. Oh, that's going to be unfair competition for the banks. Excuse me, that's exactly why you need a postal bank. If you want to call it unfair, good. There's 4 institutions that need unfair competition. Are you kidding? Are you kidding, Perrin Davey? You want to align with CBA, Westpac, National Australia Bank and ANZ? Is that the hill you want to die on? Go ahead. You will. You absolutely will. This is crazy. Those banks are an oligopoly. The only way you're going to break up that oligopoly and make them function properly is if they have to compete properly, and they're so powerful they won't be able to compete with anything in the private sector. It'll never match them. The only thing that can make compete is a government bank.
Now, speaking of scandalous assertions, our next topic is PwC scandal rocks world financial foundations, and this is also coming out of Senate estimates discussions this week, in which questioning of Australian Taxation Office and other figures revealed that with the multinational anti-avoidance, tax avoidance law that came into effect in 2016,
yep.
The ATO realised already the very next day that something funny was going on, because the 44 multinationals that were affected by it came in with ready-made schemes to dodge it. So already the light had turned on, something's going on here, and it took them a bit longer.
How come they're prepared? We've got the kryptonite here against them, and they're already prepared for it.
So that was 2016. 2017, the ATO obviously had done some looking and had become aware of the PwC breach of confidentiality. Of course, PwC had helped to draft, with advising the Treasurer's Office, this bill, and then they'd gone, as we know, because the scandals revealed that they'd gone and let everybody know through their organisation.
Their man who was in the drafting group, he had signed a confidentiality agreement. He broke that, told his partners, and his partners sent out emails, we can help you, to all their clients saying, we can help you get around these new laws that are coming in. So
the wheels keep turning rather slowly, and by 2018 the ATO had shared this evidence with the Australian Federal Police, and meanwhile, from 2018 until today, the ATO had to deploy an assistant commissioner precisely on this subject with 20 staff, mind you. The AFP considered the case at that point for a year, repeatedly requesting information from the ATO, which the ATO could not divulge, which the AFP knew, and instead of going and getting the warrants to get the information for themselves, they just concluded that they had insufficient evidence to proceed with a criminal complaint. Instead, it was referred to the Tax Practitioners Board, which resulted finally by the beginning of this year in the head of tax practice at PwC, Peter Collins, being banned for 2 years. You know, tough. So in these hearings, a number of things were drawn out, but one of the key things was that Senator Pocock asked the ATO, so, you know, while all this was going on, you never thought to raise this with a government minister? And the ATO responded that it would have been a breach of the legislation that requires them to protect information and not share it with unauthorised people, which evidently includes government ministers.
Well, and think about the AFP referral was 2018, and it's 2023. This is 5 years later, right? This is coming.
How much tax has been dodged between then and now?
And so there's two aspects to this. There's PwC's criminality and corruption interfacing with the government, and then there's just the laws are written to allow those things to be covered up.
Yeah.
Right. Even if well-meaning people don't want to be covered, don't want to cover them up, they don't have a choice, because if someone in the ATO had said, "Well, we're going to say it anyway," they might be facing 150 years in jail, like
the other
Richard
whistleblowers.
Boyle now. Richard Boyle revealed things about the ATO, and he's now facing 150 years in jail, right? I mean, we are not a country that wants transparency. We are full of it. We are absolutely full of it. We have no moral superiority on the world stage whatsoever. Get that out of your head. These are the cases that absolutely prove it. But this is potentially huge, Elisa. I'll try and be quick on this, but I want to just sketch a bit of an understanding for people. We're in a period of global financial tumult going back to 2008, actually before that, but it really erupted in 2008. And ever since 2008, which was a crash of the financial system, everything's been done to try and just put fingers in the dike to stop the dam breaking rather than solve the problem, and that includes central banks flooding the system with money and all that kind of stuff, right? But 2008 was the culmination of 2 decades at least, more, 2 to 3 decades of unbridled speculation that started in the 1980s. And these financial institutions stopped making money by being proper financial institutions. They just became a casino, right? And every year they had to produce books to show that they were still sound financial institutions that are audited. And those auditors are 4 companies, 4 partnerships: PwC, Ernst & Young, KPMG and Deloitte. Used to be 5 before, we'll get to that in a minute. The big 4 audit 98%, something like 98% of the world's biggest banks and multinational corporations. They give them a clean bill of health. Every single bank that collapsed in the GFC in 2008 had just had a clean audit from one of those companies. Every single one. But get this, because they're partnerships, the British, especially in Jersey, allowed them to set up a structure whereby they could be these huge multinationals but still maintain the benefits of a partnership, including secrecy. And I was part of a Senate hearing back in 2019 where Green Senator Peter Whish-Wilson kept asking the question, who audits the auditors? And the answer is nobody. So if you look at the post-mortem of the 2008 crash, there were 7 institutions actually that bore a special responsibility and nothing was done to them. The 4 auditors and the 3 ratings agencies. Remember Standard & Poor's, they rated all this junk as AAA, right? Those are the gatekeepers of the financial system, the actual gatekeepers. And nobody has touched them, because I can tell you now there would be a symbiotic relationship between, like, we now see what the kind of criminality PwC is capable of, but it's the auditor for some of the biggest crooks in the financial system. It knows their criminality too. And they have and the governments are all getting money from these banks, etc. The political parties that form governments, they've all got this vested interest in watching each other's back. We wrote in the alert this week that one of the reasons this is coming out now is because there's actually shifting political sands where there's more and more cross benches in the parties. The 2 major parties, I tell you, they interface the financial system, both of them in a very, very corrupt way. That's why you'll get individual Labor or individual coalition members of Parliament, they sound really good. But when they're in there, all they do is make excuses about why they can't change anything. That's also why a lot of the best footage you'll see from these hearings comes from the Greens. Because in my experience, all the crossbenchers, we're happy to work with all of them because at least they're not answerable to vested interests, right? And so it was Barbara Pocock who got this sort of stuff coming out. Now, our party was ahead of the game on this. In 2019, the reason I was at this hearing is because we put up a bill back then. Bob Katter introduced it in Parliament to audit our big four banks using the government's auditor, the Auditor General, not the big four accounting firms, because we said you cannot have any confidence in the soundness of our banks if they've been signed off by these big four that are responsible for the global financial crisis, right? That came out of the work that was done by the British Labor Party, which for a while was actually under the leadership of a true outsider. Jeremy Corbyn was an absolute threat to the corruption of the world financial system and to the war machine. He's not a perfect person, but I can tell you now, he was not owned by them. He's the only person who's come closest to power in the world, real power in the world, who would have been a genuine threat. And that's why they destroyed him as a leader of the party. His party appointed an accounting professor who's a friend of ours, Prem Sikka, who's known as the activist accountant, to do a report on reform in the audit industry in 2018. And it was Prem Sikka who put out this report pointing out all this corruption. And that led to us saying, well, let's help with the reform process. When Prem was announced as the person who was going to conduct this inquiry, he told me all the auditing firms and banks in the City of London contacted him and said, oh, come for lunch, come for dinner, come for this meeting, come and have drinks. And he turned every one of them down.
Let me buy you off.
Exactly, because he knew that's what they were trying to do. He turned every one of them down. He said, no, you come to my office. Where's your office? And he said, it's at the McDonald's in Embankment Station in London, because he lived out of town. He'd catch the train to that station. He'd get his laptop set up at the McDonald's. He said you only needed a cup of tea an hour to be able to stay there. Free Wi-Fi. And he'd make these people in pinstripe suits come and see him there because he refused to be bought off. And that actually kick-started this increased scrutiny of this problem. And now, there's we can't go through every single cause and effect knock-on. Now it's erupted into a massive corruption scandal in Australia that's being noticed around the world, and people around the world are saying about PwC, this could be its Arthur Andersen moment. And it's now the big four, there used to be big five. Arthur Andersen was the big one that signed off on Enron. And when Enron collapsed in 2001, Arthur Andersen collapsed in 2002 because it destroyed its credibility. And this could be the same for PwC that's happening now. And that has huge implications for the entire global financial system.
And just to mention too, the other thing that had happened in the UK in the last few years is the collapse of Carillion, which was this company that ran all these contracts for government departments and government services. And you have a big collapse like that and it suddenly rips the rug out from under all your public service and public sector. You see the impact of having outsourced everything. And of course, we had here in Australia a Senate inquiry which concluded in November 2021, which was headlined APS Inc., meaning Australian Public Service Incorporated, undermining public sector capability and performance, which went through chapter and verse in terms of policies which just arbitrary, really, like putting a cap on the number of public servants and making a certain amount of things being outsourced for that reason, which they documented led to this complete loss of capability, expertise and resources within any given sector. And this was really especially affecting areas like aged care, veterans affairs, NDIS, which require a lot of specialised skills, understanding and knowledge of existing legislation to be able to navigate, people's cases and so forth. Up to 75% of some departments was outsourced to consultancies and or labour hire. And of course, when the contracts would expire with any given consultancy, then the public service lost all of that accumulated skill.
And one way to think about it, Elisa, is because there's the four auditors are also consultants, right? So there's four of them, and there's three other big ones. Boston Consulting, McKinsey and Accenture, which is actually what's left of Arthur Andersen. So there's 7. They're all multinationals. And when you see in cases like Australia how much they do the functions of what the public service used to do, what you've got to think of it, hang on, this is a globalised, privatised public service we've got. Globalised, privatised public service. This is crazy.
Privatised government.
Exactly.
It's government by private consultants.
Exactly. International, multinational private
democracy.
consultants. It's the opposite of democracy.
Yeah, unelected bureaucrats governing.
It is fascism by definition, the corporative
that's
estate.
right. Yes. Now, you also mentioned, of course, that this has implications for the global financial system, and I want to turn to our final topic now, the untold story of US bank bailouts, because, look, the financial system is coming down. It's been coming down for quite a while, and there's efforts to prop it up every step of the way rather than to actually solve the issue, as we've been talking about in this country for over 30 years. Now, we reported a couple of weeks ago when I was last on the show, I did a segment on the regional banking crisis in the United States. There are 3 more US regional banks that are in trouble at the moment and, you know, on the verge of collapse, and various efforts to prop them up along the way. And one of the things I mentioned in that last show was that there'd been a huge exodus of deposits from the banking system, and I want to talk about that a little bit more, because the line that's been put out by the media is basically saying that the problem is regional lenders, all the money is fleeing to the big banks because people feel that they're safer. And that's actually a complete lie, and we've documented it in the Australian Alert Service. From April to December last year, so April to December 2022, the biggest 25 American banks had a loss of deposits worth over $500 billion. During that same time frame, the 4,000 plus smaller American banks had an increase in deposits of 25 billion approximately. So it wasn't, you know, true at that point. And coming into March this year, when we had the regional banking crisis, it was still the big lenders, the big 25, that were hemorrhaging deposits. And we'll put up.
So that is the very opposite of what the public have been told. There's no confidence in the small banks. Everyone's fleeing to the big banks.
Now, there was, of course, this crisis that started in March with the regional lenders. So people did start pulling out. There was a spike at that point of people pulling out of these smaller lenders. And we'll put up an animation in the background because you can see a comparison of the size of these collapses to 2008. I mean, these are some of the biggest collapses, bank collapses.
But that when it did happen, when the confidence was lost, that was facilitated by the media casting doubt on the stability of the small banks, saying got to get to the strength of the big ones.
So the big banks turned it on to the small banks. One, with that propaganda narrative. Secondly, the big banks started shorting the smaller banks, forcing deposit runs. Now, of course, these smaller banks were also victims to the fact that you had this period of very, very cheap credit from the Fed, low interest rates for a very long period of time. They'd put out a lot of loans into particularly things like commercial real estate. And of course, Silicon Valley Bank, you've got a lot of money going into the tech sector and so forth. Fine, that's fair enough. But when the interest rates started going up, a number of things started happening. On one hand, you had the assets on the books of the banks, things like treasuries, that started devaluing. So their asset book was going down in value. At the same time, a lot of these banks couldn't keep putting up rates for their depositors, and depositors were seeing higher interest rates elsewhere. So a lot of people just started pulling out, especially the big depositors, and these Silicon Valley banks, you know, most of their depositors are very, very big companies that have large deposits. And there was a huge move to things like you can go to treasurydirect.gov and you can actually directly interface to buy treasury bonds and things that have a much higher yield for people that are trying to live off the deposits or earn interest rate. So the number of accounts had increased by 500% in 2021 to 22 at treasurydirect.gov. The purchases of bonds and things had increased by over 800%. So this was affecting these banks who have to, of course, borrow short and lend long as per the banking model. So if they start to lose deposits, you know, because that's their borrowings, they have to give it up immediately. They have to give that money back. They can't just hang on to it, but their loans that they've got out are long-term things, so they can't balance it up. So when you had the big banks come in and start shorting the shares of these regional banks, that just exploded this whole problem. And up on the screen you'll see that we've got this chart showing the most shorted banks. This is a S&P Global chart. And you'll see the companies at the top: Silvergate Capital Corporation, First Republic Bank, which of course went down, and PacWest Bank Corp, which is one of the ones that's now on the chopping block as it being expected to be the next one to go.
And the point is they're all smaller regional banks.
That's right. But now you look at the bailouts of these small regional banks, and I'll just take the example of First Republic to see who it benefited, because JP Morgan Chase started out as the advisor to find strategic options to save First Republic. It then put over 800 employees to work to cut a deal with the Federal Deposit Insurance Corporation, the FDIC, to save First Republic, which ended up recommending, of course, that JP Morgan take it over. FDIC agreed to eat 80% of any losses on single-family residential mortgages for 7 years as part of this deal of JPM to take over First Republic. It agreed to eat 80% on commercial loans losses, including commercial real estate, which is where a lot of these loans have gone, as I said, for the next 5 years. As also an additional sweetener, the FDIC handed JP Morgan a $50 billion 5-year fixed rate loan at an undisclosed interest rate. They refused to disclose the interest rate, probably nothing. And this entire package, as Wall Street on Parade, which is an excellent website that plays a watchdog role over all this kind of corruption, as they observed, all of this raises the question, who got the bailout? Uninsured depositors at First Republic Bank or JP Morgan Chase? Right? Who is really in trouble here and risking bringing down the entire global system?
And by the way, when you're talking about, JP Morgan outside of because the biggest banks in the world are now these Chinese ones, of course, but outside of them, because they've earned their actual size and scale, of the transatlantic financial system, JP Morgan Chase is the big one. And it's unusually, it's got the same CEO, Jamie Dimon, right? Jamie Dimon was there in 2008, pulling the strings for those bailouts and all that sort of stuff, and he's still there now. And if you just got to look at the American political model, Wall Street dictates to the Congress. You know, Trump ran on a platform of bringing back Glass-Steagall, right? So that because now everyone's focused on the safety of deposits. Mm-hmm. Well, the only way to really the reason the FDIC was set up, it was set up not just as this, because there's 20 trillion in deposits in America. The FDIC's got $200 billion in it. It actually cannot insure those deposits. The FDIC was always set up to work in conjunction with Glass-Steagall, a gulf between speculation and deposit banks, so that deposits never get into trouble, right?
Because if you let the commercial banks and retail banks speculate, you've got to be prepared to lose the lot, and you can't back it all up.
And it's the banks like JP Morgan and Goldman Sachs that crushed the moves to Glass-Steagall and made sure it never happened. Yes. And everything gets rigged in their favour because of their political influence over the political system, right? This is a case of the system being rigged, and that's why you can sometimes look at this and go and get quite daunted by the idea of how you turn around and see another aspect of the system being rigged and think this problem is intractable because these financial powers are all powerful. And that's why we pointed out in the alert this week, though, Elisa, nothing is ever all powerful. And the way this PwC crisis has erupted 9 years after the fact, 5 years after the government agencies tried to do something about it in the way they could, and if it didn't come out then, you think, well, it'd never come out. No, it's coming out now. Because there are shifting political sands that are helping bring this out, right? And we are part of that process.
Critical part, yeah.
And what we're doing is saying, okay, here is the financial system as you have it, which is corrupt as sin, etc. It needs to be reformed. We're trying to give people the ideas of how to do that, some of which is actually here's regulations like Glass-Steagall. More fundamentally, here's what a better financial system would look like, and at the centre of it is a government bank, right? A national bank that can set the standard of behaviour, prudence, security, right, around which the economy will always function, whatever the private banks and operators do.
That's right, and we've got the program and the policies ready to go to put in place. As long as you've got people that are prepared to fight for those policies, people who are prepared to fight for the truth, as we've just demonstrated, the truth will eventually come out and enable a transformation of things. So,
Lisa, I want to end on one funny story, which we just heard before. So for the last few weeks, we've been telling people to make submissions, anti-AUKUS submission, no to AUKUS, to this Senate inquiry into nuclear propulsion. The regulars will remember that. We just discovered something. Since 2017, our party has made a real name for itself by getting people to participate in Senate inquiries in big numbers. And the first one was the bail-in inquiry in 2017. And the main committee we've engaged with is the Senate Economics Committee, right? And we've flooded them. And over time, we ended up making an enemy of the secretary of that committee who got sick to death of us. His name was Mark Fitt. And I had some run-ins with him, right? He didn't like, he saw when the Citizens Party was involved in a campaign, right? He knew he was going to get inundated, right, with submissions. And on the cash ban campaign, which was his committee as well, I had a real run-in. He hung up on me on the phone, right? Anyway, he's not part of the Senate Economics Committee anymore, and we've been dealing with someone different there. And I wonder where Mark Fitt got to. Well, it turns out if he thought he was going to escape us, he hasn't, because he moved on to the committee that's running this AUKUS-related inquiry into this bill that we've just told everyone to flood.
Yep.
So
keep it up.
Good to renew acquaintance with you again, Mr. Fitt. The Citizens Party represents the citizens of Australia, and as long as we're involved, you will always hear what the citizens have to say.
Yeah. So good job, everybody. Thanks for tuning in. Thanks, Robbie.
Thanks, Lisa.
See you again next week.
Authorised by Robert Barwick, Citizens Party, Melbourne.